Good morning. I'm Jane Morgan, Investor and Media Relations Manager, and thank you for joining me for the Advanced Energy Holdings Investor Webinar. Advanced Energy Holdings Ltd, which is soon to be listed on the ASX under the ticker code AIH, is a leader in advanced materials science, delivering engineered mission-critical products for energy and industrial markets globally. With operations across 13 countries, an extensive intellectual property portfolio of more than 180 patents, and a forecast FY26 revenue of nearly $388 million Aussie, AIS represents a diversified, high-growth industrial group positioning itself at the forefront of the energy transition. Through today's webinar, we'll be running through an investor presentation of which a longer form was actually lodged with the ASX yesterday. This will be followed by a Q&A session. So to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. I would like to now introduce you to the AIS Executive Director and CEO, Andrew Bennion. Good morning, Andrew.
Good morning. Good morning, everyone, and thank you for joining us today. As Jane said, we are AIH, Advanced Energy Holdings, and we will be listing on the ASX today at 11 o'clock. And as she said, we are a leader in engineered materials, operating across the whole energy sector.
Excuse me a moment, I might just stop that. There we go.
Oh, right. Thank you. In terms of who we are, as I said, we operate across the energy sector and industrial sectors, and we produce products that are protective in nature, applied to mission-critical applications. So essentially, we stop things from blowing up or burning down or mechanically breaking. As Jane said, we are diversified. Our year end is the end of September, so we're currently going through our audit process at the moment. And we are forecasting revenues in 2025 of 334 million and earnings of 56.4, and we will meet or exceed that prospectus number. And we've reconfirmed our forecast for 2026 at 388 million and 62 million of EBITDA. We're a company that's all about organic growth. Since Simon and I started the business back in 2008, following a management buyout, we've grown at around 22% per annum. And as we've scaled, we've still managed to grow at 16%. Because we're operating in the energy market, it's a large addressable market. We've got a lot of work to go at. And as Jane said, we have a very extensive IP portfolio, lots of patents, and more importantly for us, type approvals, which are crucial in mission-critical applications. And they're basically a third-party assessment that says whether you can meet those standards. They take several years to get, cost quite a lot of money, so it's a really good barrier to entry, and it really limits competition in the areas that we operate. We've got very substantial transparency on work coming up for the next 2 or 3 years. We have a pipeline of opportunity in excess of $2.4 billion, and we are a company of 800 people across 13 countries. Most of our customers are blue chips. We've got long-standing relationships with many of them. We partner them for jobs all over the world. We've got a track record of growth in both revenue and profitability. We're an acquisitive business. We've done quite a few acquisitions over the last 3 or 4 years, all of which have been earnings accretive, and they've broadened our product base to continue our organic growth story. As we touched on before, we operate from traditional oil and gas through the energy transition, lots of LNG projects, fixed offshore wind, mainly in Europe and the UK, industrials and marine, and we're also working in the up-and-coming areas of nuclear, quite a bit in defence and aquaculture. And we've got a new product line for the protection of lithium-ion batteries, which is effectively the electric car protection from thermal runaway. Some of the areas we operate in, we've got fire protection and insulation, which we do across a number of industries. We've got marine navigation aids, but around about half of what we do is subsea. And the next slide will give you an example of the products that we have. So if you can see from the graphic, the items on the right-hand side are typically what you would use in an oil and gas scenario. And those products get deployed at depth up to 3,000 meters, 3 kilometers below the surface. And they are designed to last for the life of the field. So they're there for 25 to 30 years. So you can imagine, very highly engineered, designed for longevity. And we operate on virtually all the projects that happen across the world in some way, shape, or form. In the centre of the graphic is a floating wind, and that's an up-and-coming area, particularly in the UK and Korea. That will be a growth driver for us in the coming years. And then on the far left is fixed bottom offshore wind, which is typically a lot shallower, 60 to 100 meters. And we provide products there that protect the cable from tides and currents and protect it from damage. Again, life of field, 25 years or more. We operate globally. We've got manufacturing facilities in the UK, France, Malaysia, Brazil, the US, and that's supported by sales operations in Europe and Asia. And we're able to provide a service to our clients across the globe. We try to be local to the clients because that's important for quality of service. And with the listing in Australia, we've got a foothold here. It is an area for our acquisition strategy, and it's an area where we can develop and grow in, and that's our intention and part of the rationale for being listed in Australia. As we touched on before, we have a record level of pipeline of opportunities, pretty much split across all our product groups. It's in excess of 2.4 billion. It represents opportunities for the next 2 to 3 years as they move through the pipeline. And we use it as a gauge of industry activity, and there's a lot of industry activity, a lot of tailwinds, a lot of growth. And then also we have a record level of order book. We've got 220 million of orders already booked for FY26. That represents close to 60% of next year's forecast revenue, which for us is a very healthy position. We would normally be around about the 40% mark and very comfortable with that. So we're in a really good position for that. We had quite a few large wins in the last few months, certainly in some of the subsea areas that we talked about before. And then also quite a bit of offshore wind and some fire protection as well, and more to come. So in terms of takeaways, what we are as AIS, we've got good demand coming forward. We've got global operations across the globe to help us to support our customers. We've got advanced material science. We've got a lot of IP that helps protect our business and limits competition, and we've established that over many years, so it's quite difficult to replicate. And as we said, record order and record pipeline. So thank you for your time today. Hopefully you can see that we're a proven, profitable, globally diversified material science business, and we're positioned to capitalise on the full range of markets, from transition to hydrocarbons. We believe that we've got a good, strong outlook, and we are very confident that we can deliver sustained shareholder value over the coming years. And we look forward to welcoming new investors as we commence our journey as a listed business. So thank you for your time today, and I'll hand you back to Jane.
Wonderful. Well, thank you for that update. Let's move to some Q&A. One of the ones, and you actually touched on this in your presentation anyway, but so you are a UK-based company. I mean, why the move to the ASX market?
Yeah, well, the ASX is a primary market, and it's one of the deepest small cap markets in the world. And when we were evaluating markets to list in, we found that the investor base here had a very good understanding of a business like ours, operating in extractive industries, engineering, and we feel very comfortable here. Historically, we've worked on a lot of Australian energy projects that we've engineered from outside the country, but by being here gives us a good opportunity to develop our global footprint here as well.
Yeah, absolutely. Again, another question that's come through a few times. So, do you see any M&A opportunities on the horizon, and in particular in the Australian market, that might require more capital?
Yeah, well, the actual listing gives us about $100 million of firepower to do acquisitions. We are prioritising acquisitions in the Australian market. We've got a number of targets that we're looking at, and we expect to grow our footprint here. What we look for in an acquisition is a geographical focus, products that we don't have, but an ability for us to put our own products in there. And that's what we're looking for in Australia. We've got a very large pipeline of opportunities across the globe, but we have a focus on establishing footprint and foothold here.
Thank you, Andrew. Another one that's come through a few times. So can you talk to the competitive environment and how long it takes to become a qualified supplier with these tier one companies?
Yeah. So in general, for competition for our main product groups is limited to maybe 2 or 3 companies. And the reason for that is because what we do is mission critical. What that really means is if our product was to fail, the implications for our customers are huge in terms of downtime and cost. So as a consequence of that, they are very careful to make sure that the products that for those applications are very highly specified. There are very tight specifications, and you have to demonstrate that your product will meet those standards. So, for example, something that protects a cable from bending, you've got to run it for several million cycles so that they know it's going to last for 25 years. To do that can cost several $1 million and take a year or two quite often. But once you've got that, that's quite a barrier to entry. And that's why competition is really quite limited. And even if you do qualify and you do prove that your product's good, there's a lot of brand loyalty as well, because the people don't want to take the risk on a brand new product, even if it's proven, when they've got one that's already working and they've been working with that company for decades.
Absolutely. A few other questions coming through, but I think that this should be able to wrap it up. So what should investors look forward to from a news flow perspective over the next sort of 3 to 6 months?
Well, I think we issued a trading update earlier today. We're in the process of auditing accounts. As I said, our year end is September, so there will be our audit accounts being issued by the end of November, and then we'll be providing periodic updates as appropriate as we go through the year. We've committed to a proactive investor engagement program here, and certainly we'll be present in country for a lot of time.
Wonderful. Well, I think that's all we've got time for today, as we are listing on the ASX under the ticker code AIH in the next sort of hour and a half. But I want to thank you all for your time. And should we have missed any of your questions, please feel free to reach out via the contact details, which can be found at the bottom of our ASX releases. But we look forward to hosting you next time.
Yeah, thank you, everyone.